Hi, I'm Stacey from Fun Caliber, and this weekend is Valentine's Day, so we're talking love and hate in a special two-part video series. Valentine's Day is sure to be different this year. It's estimated Brits will be spending 34% less than they did last year, as we're unable to splash out on eating out. And with all those savings that could be invested instead, I thought why not find out which asset classes fund managers are loving at the moment. On trend with our Valentine's Day theme is Matthew Stainsbury's, manager of Close Managed Income.
So one of the areas we've been adding to in the last year is actually the area of music royalties. These are funds that own copyrights to many classic songs. You get a very nice steady stream of income from an asset class that is completely uncorrelated to the markets.
Dr. Niall O'Connor, manager of Macdonald Defensive Capital, wants to take his pick on a candlelight dinner.
Well, this is coming up to Valentine's Day, sector that I'd like to take out for a romantic candlelit dinner. Apart from obviously our fund, the Defensive Capital Fund, the sector I really like at the moment is lending funds. And the space here we're talking about is UK-listed investment trusts that are involved in the lending space. Another one that looks very interesting at the moment is RM Direct Lending. That's on a 6% discount and is yielding around 8%. What's really interesting about this one is they are making the CBILS loans on behalf of the UK government. That's the coronavirus business interruption loans. And what's really interesting about making these loans is the government is guaranteeing a large proportion of the loan. So the government guarantees 80% of your principal and the first year's interest. And typically the interest rate on these loans is around 9%. So the maximum downside that RMDL has, RM Secured Lending has, is 11%, and they're making a loan with a 9% interest. So I think the risk reward is skewed very much in their favour. So UK lending funds look particularly interesting at the moment.
And he's not the only one looking for COVID winners. David Coombs, manager of Rathbone Strategic Growth Portfolio, is also playing into this theme.
So I think the best opportunity, given the current circumstances and for the next 5-10 years, is med technology. Because the one thing we know, and we've learned from COVID, if not before, is that governments are going to have to save money and become more efficient in the provision of healthcare or in the private sector. So companies that can help with that efficiency through superior technology to allow surgeons to see more patients more quickly, that's the sweet spot. So medtech is an important part of the strategy, but will increasingly become so.
It's been a good year for big tech names, but Richard Perfect, co-manager of VT Seneca Diversified Income Fund, is looking further down the cap scale.
Okay, so one area where has been particularly successful for us and where we think there's continued opportunity and excitement is in some of the newer breed of private equity trusts that have been on the market. Big example would be Chrysalis Investments, which was renamed from Merian to Chrysalis. There's a very visible and interesting focused portfolio of late-stage pre-IPO companies in there, and the degree of news flow coming out of that has been supportive for asset growth and following on from that, share price performance.
And let's not forget, love can be found anywhere, anytime, even in the most unloved of markets. Just ask Gary Potter, co-manager of BMO MM Navigator Distribution Fund.
One of the areas that I'm probably most interested in at the moment is an area that has been out of love for quite some time, and that is generally value. And specifically, those funds that have more of a value tilt in their aspirations. And I'm talking equity income vehicles, really. I mean, an area that I'm particularly keen on is UK equity income. And you can extend that into Asian income as well. Asia looks an interesting region as well. And I, for one, think that is going to make a comeback over the next 12 months.
And what do all these areas of opportunities tell us? Diversification is key. Stephen Andrew, manager of M&G Episode Income, tells us more about playing the field.
One area I'm loving, and it may just be a behavior I'm loving, is diversification. And that might sound really dull, but at a time when you really should be uncertain about things, you want to pick a few areas that you are comfortable with, but maybe are driven by different things. And so one of those particular areas I'd highlight would be US bank equity. But the reason I love diversification is the market's super confident right now about those things, and super confident that we're all going to party like it's 2021 once we're all able to go out and about. And yeah, that'd be awesome. But there can be bumps in the road. And as a global asset allocator, you really want to try and take care of some of those bumps in the road. So at the minute, I'm looking for a good deal of diversification. And in that, in particular, diversification against that particular risk that growth isn't all guns blazing, but it's actually something a little bit more boring. And so US Treasuries, when they're yielding 2%, well, I love those as well. So my loyalties are divided in that sense as a global asset allocator, which I feel it's a sensible place to be.
Of course, there's two sides to every coin. What's that saying? You have to kiss a few frogs? Find out which areas of the market the managers are avoiding in our next video. And remember, love is in the air, but so is COVID, so wash your hands. To learn more about any of the funds mentioned, please visit fundcaliber.com. And don't forget to subscribe for more weekly videos.